Especially after a near 50% Bitcoin price correction, a lot of people talk about Bitcoin like it's a stock ticker. Price up, price down, vibes up, vibes down. But if we are trying to measure adoption of the network, market cap is one of the worst metrics that we could use because market cap is basically a math trick. It's just today's spot price multiplied by the supply. So it can explode upward in a hype wave or collapse in a panic, even if almost nobody actually changes their behavior on chain. Realized cap, though, is different because realized cap treats the Bitcoin network like a ledger of real economic commitments. So here's the intuition here. Every single Bitcoin in the network has a history. It was last moved at a certain time and at a certain price. So realized cap takes every single Bitcoin and values it not at today's price, but at the price when it last moved. And then it adds it up across the entire Bitcoin network, so realized cap doesn't jump around because the market is emotional. It moves when coins actually move, when people transact, when holders sell, when new buyers enter and coins reprice to a higher cost basis. And that is why it's such a powerful adoption metric, because what it's really measuring is how much capital has been absorbed by Bitcoin and stayed absorbed long enough to become the network's cost basis. So if market cap is the crowd yelling right now, realized cap is the receipts. And when you compare those two lines on a chart, you will notice something very important, that market cap can whip around violently, but realized cap tends to climb more steadily over time. And that climb is the story of adoption, capital re-entering, getting distributed, getting held, and then resetting the network higher. So the takeaway for this entire presentation today is very simple. If you want to understand Bitcoin's real growth, measure what people actually paid and held, not what the price happens to be this afternoon. And another takeaway here, if you look at the realized cap line, what do you notice? It doesn't really go down ever, does it? That is the story of Bitcoin adoption. It acts like a step function. Now that I've framed why realized cap actually matters, let's define the two metrics very cleanly, because they sound similar, but they are measuring two totally different things. Market cap is the very simple one. It's just the Bitcoin price multiplied by the circulating supply. That's it. If Bitcoin is $70,000, the market cap can be big, but if Bitcoin's $50,000 tomorrow, the market cap shrinks, even though literally nobody sells a coin and nothing changes structurally in the network. So at the end of the day, what is the price? Price is just the latest agreed upon amount that the last buyer gave to the last seller. So what is that telling us? Because lots of transactions happen in the marketplace, that means that market cap is just very responsive, but it's also extremely noisy when you look at just the adoption of the network. It tells you what the market is pricing Bitcoin right now, but it doesn't tell you how much capital has actually entered and stayed into the system. And then realized cap is the way to tell the actual capital adoption of the network because it's built from the ground up using on-chain history. Realized cap values each coin at the price when it last moved on-chain, so every single UTXO, every chunk of Bitcoin sitting in someone's wallet right now, it has a last move timestamp. So realized cap then looks at that timestamp, pulls the price at that moment, and then assigns that coin that value, and then it adds all of those values together. So it's easy to get bearish when you see the market cap going down, but what is it answering? It's just answering what is Bitcoin worth at today's spot price, but realized cap is answering how much capital has the network actually absorbed based on where the coins last transacted. And this is the key point. Realized cap only meaningfully changes when the coins move. It doesn't care about intraday volatility. It doesn't care about the headlines, the FUD, the fake news out there. It updates when the network updates. So when you're trying to measure adoption of this network, the market cap is basically a thermometer that swings wildly with sentiment, but realized cap is closer to a balance sheet. It shows you the accumulated economic weight that's actually been committed to Bitcoin over time. And that's why realized cap is such a strong adoption metric, because it's anchored to behavior and not to feelings. Because we do need to think of Bitcoin as a giant public ledger of ownership, because that's exactly what it is. Every single coin exists in outputs, and then those outputs have a very simple property. They were last moved at a specific point in time, so each coin has a kind of last known economic truth attached to it, the price that the market paid when that coin last changed hands. So if you just take that idea and then you scale it to the entire network, well, realized cap just behaves like an aggregate cost basis, which is essentially the network's recorded entry price history. And this is another insight that might be clicking in your head right now. Realized cap is relatively insensitive to volatility. We know that volatility itself doesn't move coins. Bitcoin can dump 20% in a week, and realized cap might barely move if most holders just sit there and do nothing. And that tells you something very important, that price can swing without adoption changing. On the other hand, when coins start moving, when distribution of the asset actually starts to occur, when new buyers come in and pay higher prices for the supply of the coins, realized cap rises then, because the network's cost basis is literally being reset higher coin by coin. So think of it as a ratchet. Realized cap is like watching capital get absorbed into the network in a way that sticks. Market cap is just the mark-to-market value. It's the headline number, but realized cap is the mark to behavior value. It's what people actually did. And once you view Bitcoin through this lens, you realize that the realized cap is basically a living record of adoption. It tracks where the money entered the system and where the supply last settled. So when you're looking at that realized cap line, you're just looking at the historical footprint of buyers taking the coins off the market and then repricing the network over time. Now let's talk about the shape of realized cap, because the shape is the message. You know that the market cap is a roller coaster, but realized cap is more like a staircase. And the reason is very simple, because adoption doesn't arrive smoothly every day like a constant drizzle. It arrives in waves and in regimes. So this is what a wave looks like on chain. New demand shares up like it did in 2017, and then the buyers bid higher right here. You guys remember December 2017. The coins move from the weaker to the stronger hands, and then a lot of the supply gets repriced at higher levels. And that causes this realized cap to rise, not because the chart was exciting, but because the network actually redistributed ownership at higher prices. And then after that wave passes, something interesting happens. Even if the price chops around or pulls back, the realized cap often flattens because coins just stop moving. Holders get entrenched in the network, and then the network's cost basis becomes sticky. Even after this latest 50% Bitcoin drawdown, the latest drop in realized cap is about 1 to 2%. You are watching a $1 trillion network bootstrap itself in real time, and this is the chart. And this is really cool because you're basically watching Bitcoin build its adoption foundation in distinct floors, in distinct regimes, and each new floor is harder to undo than a price candle because it represents distributed ownership and paid in capital, not just an opinion about today's price. Now that you understand realized cap as the network's cost basis ledger, the next question always is, how do we see it changing in real time? And that's where the realized cap delta comes in, basically the change in realized cap over a defined window like 30 days, for example. So instead of looking at the absolute level, which trends upward over long horizons, the delta tells you when the network is actively absorbing new capital right now. Think of it like this. Realized cap is itself the accumulated weight of adoption of the network, but the realized cap delta is the rate at which that weight is increasing. And when that 30-day delta spikes, it usually means that the coins are moving and being repriced at higher levels. The supply is changing hands, and demand is strong enough to pull the coins out of the old cost basis and then reset them higher. So this right here really is the signature of the real adoption pressure, not just the price going up because the market got excited, but the price going up while coins actually move and the ownership shifts, and then the network locks in a higher aggregate cost basis. And this is the interesting part. When you look at the graph, the 30-day change in the realized cap, what is the lowest that we have seen ever in its history? It is right now. That's correct. You're looking at it. This is even lower than when we were in the 2022 crypto winter. But when the delta cools down, it doesn't automatically mean bearish. It actually means the opposite. It means that the market is quiet actually, and the holders are sitting tight because fewer coins moving obviously signals conviction, and dormancy. When the delta does go this far negative, that can be a sign of stress and redistribution at lower prices, more coins moving during drawdowns, capitulation behavior, or forced selling events that reset the cost basis downward. But at the end of the day, the realized cap delta is the footprint of what actually happened on chain. And when it's down 1 to 2% versus the price going down 50%, this really tells us the broader picture here, whether the network is absorbing capital or shredding it. And then if you bring those two worlds together, the market's perception with the network's cost basis, you get something called the MVRV. And the MVRV is simply the ratio of the market cap to the realized cap. So what does that actually mean? Well, we know that market cap is basically the value of the network at today's spot price. We know that realized cap is the value of the network based on when the coins last moved, basically the aggregate cost basis. So MVRV tells you how expensive Bitcoin is relative to what the market collectively paid for it. And if MVRV is high, that means that the market price is far above the network's cost basis. And that tends to happen when enthusiasm is strong, obviously. Historically, very high MVRV conditions have been associated with those overheated regimes because the price is running way above the adoption base, and then conversely, when it's low or it's below the network's cost basis, that happens in stress regimes when the sellers are capitulating. So MVRV basically becomes a kind of valuation pressure gauge. It doesn't predict the future by itself, but it does give you a very clean read on where the price sits relative to the network's accumulated adoption foundation. Realized cap is the anchor. Over long periods, you saw that the realized cap trends upward as the adoption locks in. The market cap always oscillates, and it's easy to get lost in the noise. And then the MVRV is telling you how stretched the market is above that base layer at any given moment. And that's why analysts love this metric, because it's priced against what the network has actually absorbed and held. So if you want a cleaner valuation framework than raw market cap, MVRV forces the conversation back to reality, how much capital is truly committed and how far above that commitment the market is currently pricing the entirety of the Bitcoin network. Pretty interestingly, we saw the MVRV really at high points at the beginning of 2024 and at the end of 2024. 14 months have passed since the all-time high of Bitcoin in gold. And then if you look at when Bitcoin hit an all-time high in US dollars, you can see right here that it reached the same level about toward the second half of 2021 after the big run-up in the price. This is just yet another valuation metric that's telling you that Bitcoin is valued pretty cheaply right now. This is not financial advice, this is financial entertainment. But if you want to be positioned in Bitcoin securely and strategically before the next shift happens, Swan Private is for you, because Swan Private helps individuals, high net worth families, family offices, literally anybody who wants to be secured in their Bitcoin position be actually secured before that shift happens. Visit swan.com/no-second-best to learn more. Get paired with a professional who can help you every single step of the way. Please like this video and subscribe to Swan to be with us every single day while we lead you through the way of the greatest wealth transfer in the history of humanity. Have a terrific day, everybody. Do not party too hard. Class dismissed.